Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 21st of September. So as we start off the new week, well, we've got a relatively light news schedule, not many facts and figures coming to the markets today, but there are two key announcements, or two key speeches I should say, one from Christine Lagarde, President of the ECB, and the other the Fed Chair, Mr. Powell. Now those speeches are due at 1:45 and 3 o'clock respectively this afternoon. I think they'll be closely watched by the markets. Otherwise, big news around the globe, of course, we can't miss it, which is the virus numbers are increasing and a number of different countries are now starting to reimpose and look at further restrictions and reimpose lockdowns. So let's take a look at the markets and take a look at a couple of opportunities that we're looking at going into the beginning of the week. So if we first off come and take a look at the Dow, we can see that the Dow, in fact all US index markets, the S&Ps and the Nasdaq, have made quite a bit of a rollover here in price sentiment. So at the moment they're all starting to look rather negative to the short side, but if we just take a look at this from the bigger picture and start to look at key structure levels, then we can start to build a picture of things. So from the Dow's perspective, we've got this 27,000 level, which is the real key level here on this market. And bearing in mind this has had a phenomenal run and a phenomenal sort of retracement here in the context of very, very poor economic situation within the globe, and now the market sort of getting some sort of retracement. So pulling back into 27 is really just a retracement back into the sort of normal sort of zone here for this market. So this is the first sort of level of key support from a macro perspective, and I think here really if the market does continue to see further weakness, we could see 27 in the early part of the week. Now then the big question is going to be, how is the market going to deal with 27? Certainly the Nasdaq and the S&Ps are looking decisively bearish by comparison to the Dow. So taking a look at the daily time frame here, if I just sort of zoom in a little bit, you can see our 27 level through here. You can see that the market is within a trading window at the moment. It's only got about another 200 pips to get down to 27, so I wouldn't be at all surprised to see 27 tested before another sort of decision point is sort of made here. Now might sort of get some sort of bounce here, but I think the path of least resistance, or the easy move I should say, is clearly to down to that 27 price point. The time frames where you might actually sort of pick up on this, and the time frames we're focusing on, is going to be the lower time frames here. So intraday opportunities to be able to get plenty of potential reward to risk, and at the moment we'd be looking at retracement back into sort of key levels. So if we did get something back into that 27,320, then that would be a good area to start to look at potential potential weakness, and looking for a bit of a continuation. Coming into some of the metal markets now, gold and silver have had quite an interesting sort of time lately. Now at the moment they are sort of looking relatively overbought, we know that, but the markets are still sort of consolidating into this sort of popular sort of triangulars type of sort of formation. If we look at this on the daily time frame, you can see that the market is really sort of being pegged around this 1950 area, which is quite a key level for this market, and has been quite a tradable level for us over the past sort of few weeks and months in fact. So the markets continue to grind into 1950. My preference here really is for a break to the high side on this, as the world economics would kind of support a bit of a rush to in towards sort of safe havens, particularly if the US equity markets did sell off significantly. So if we saw continued weakness in the US equity markets, then we might see a turnaround here in gold, and we might start to see buying opportunities coming in. So we're looking at keeping a very close eye on gold and silver in fact, and looking at opportunities here for buying signals if once the markets start to move. Now, of course, when we look at these on the mid time frames and the sort of lower time frames, they don't look particularly helpful at the moment. The market's still stuck within this sort of consolidation, so we need to see setups, we need to see the formation of sort of trends to the long side. If gold got underneath down 1920 level here, and we started to see moves underneath 1920 or weakness underneath 1920, then our bias would change for the short term, and we'd be looking for intraday moves to the short side here. But at the moment, still sort of focusing on the longer side while we have those index markets looking rather weak. Now, if we come across to the currency markets, one that we're keeping a very close eye on here is cable. Now, Great British Pound has really been battle bruised over the past few weeks, in fact months, where sort of Brexit negotiations and deals and political ramifications have been going on for many months now, and cable has been quite a volatile market from it. But if we have a look at this from a technical perspective here on the sort of weekly chart, we can see that the power of the move for the market moving up, we've had this very strong sell-off where the market sort of come back down into 28,000 area, and then it's rallied up to the 130 price point. Now, from the trend perspective here on the weekly chart, we might start to look for new sort of long opportunities, but only if the market gets above that 130, so gets above that level there. However, if we come and have a look at this on the daily time frame, you can see that the market has sold off into 128. We've then got a rally up into 130, and now the market is started to break down below that 129. In fact, it's not quite there yet, but if the market does break below 129, then we're looking for a move down to 128, and that's the sort of move that we're looking at. So about 1,000 pips in the move there. Again, if the market does get above that 130 area, then our stance changes. That's the bullish, and we'll be looking for moves back up to 132. But we're at some very sort of key interesting points at the moment, potentially the start of some potential swing moves here on cable. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.